Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In our today's session of automated trading, we will be continuing to work with the linear regression intercept. This is the second part of this series which we started yesterday, and linear regression intercept is a fairly simple indicator. It involves doing some calculations to determine the trend and the overextended scenarios as well. We use the LR technique here, and we plot the trend line, not the spot. It is plot. And before we get started, this is a standard disclaimer here. I would like to remind that this session is simply for the tutorial purpose, and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing and also run it on the demo account to get a first-hand experience of its working. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we get started for the day. So in yesterday's session, we had taken into consideration what are the requirements for our algorithm. In today's session, we will be mainly focusing on the buy side, as we have already got most of the required blocks in place, and now is the time to first complete one side of this symmetrical setup, and then if time permits we will start working on the sales side, or maybe in tomorrow, that is during the Monday session we will do it. Now for the buy side trades to happen, we need the last 4 hours candle to have closed above this linear regression intercept drawn on the 4 hourly time frame with the time period defined as 14 candle periods. So here we have this condition, and as you can see, starting from 13 GMT of 9 June, we had the conditions in place till around 13 GMT of 11 June. So for 2 days, the conditions were conducive for the buy side trades to happen, and for sell side, we have these now conditions in place after 17 GMT of 11 June. So here the candle has closed below this linear regression intercept, and now the sell side trades can happen provided the 1 hour conditions are in place. So for 1 hour we need some correction to have happened, and now if the buy conditions are in place on the 4 hourly chart, then we want to make sure that there has been prior correction. So what we are doing is that we want the last candle to have just closed above the linear regression intercept on the hourly time frame, but prior 4 candles, the candles before the last candle, they should have closed below this linear regression intercept, and that will mean that there has been fair bit of correction, and after the due correction, the underlying instrument is again getting fresh momentum on the upside, and that is why it is rising up and crossing above the linear regression intercept after undergoing the corrective phase. So in such a scenario, we will be going in for a market open. We are not really going for a pending open in this setup as well, and in the market open we will be utilizing the daily time frames volatility, and then we will do the ATR calculation to determine the stop loss and the target price. So that will be our setup, and the risk reward ratio is going to be of more than 1:2. So let us now go back on the Visual J Forex platform to see what we have done so far. We did instrument subscription. The instrument has been defined, hard coded for Euro USD. Position amount has been set at 0. Then we got this linear regression intercept blocks, 4 hours and then 1 hour each, with look back period ranging from 1 to 4. And we also got the historical candles including of 4 hour and then 1 hour each, and look back period is of 5, not of 4, as we have to take into consideration last 5 candles of hourly time frame. The last one is the deciding one, and the four prior to the last one are going to be used to define the prior conditions there. So here we have got this, and then to determine the exact entry point, we got this 1 minute historical candles, and stop loss and target is going to be defined using these daily ATR. I think 20% of daily ATR should be good enough as a stop loss, and 50% of the daily ATR should be good enough for the target price. So we will have the risk reward ratio better than 1 is to 2, almost 1 and 2, and 1 is to 2.5 before we factor in the spread and the commission. So with that, it's time to get started for the day, and what we are going to do is first we will do calculation for, I think we should do the calculation later on whenever we will bring in the market open block. For the time being, we leave open one empty row here, and then we will start straight away on the buy side, and as we will reach the stage where we have to bring in the open at market, then to fulfill its parameters we will carry out the calculation. So we leave out that part for the time being, and instead we go for multiple action block. So here it comes, and let us connect this just to make sure that the flow is there on the buy side when we will be connecting the block. Of course we will need to disrupt this and add some additional blocks before we are able to fulfill, but now till then we work with this. Now is the time to check for the if conditions to make sure that most of the required conditions should be in place before we go for a fresh trade. So here we are going to need a couple of if blocks, and then the linear regression intercept here. Now we need the candle 15, that is last 4 hours candle, to have closed above the linear regression intercept value, and for that we are going to consider the closing level of candle 15. So here not here, users created, auto created. Okay, so we got this candle 15, and then we will need to consider its closing level. So we take this candle 15 close, and then we compare it to the line 10, that is the linear regression intercept level, and there, as I said, the requirement is that first input should be greater than second input. So here we have got this requirement in place. Now we have to take into consideration the hourly close, and for that last 1 hour candle should have closed above the last hour's linear regression intercept, but the 4 prior candles should have closed below the prior respective hours linear regression level. So what we do is we go here, and we have to make sure that candle 21 has closed above. So we take into consideration the candle 21's closing level, and we compare it to the last hour's linear regression intercept level, and then will be the time to go back in time actually and do the comparison. So here candle 21 close should be greater than line 16. Okay, it should be greater, so that means it has closed above the linear regression intercept levels. Now for four if conditions, next four if conditions, we are going to need the inverse to be true, that is they should have closed below linear regression intercept. So we now have to take into account the candle 22 is close, candle 23 is close, candle 24 is close, and candle 25 is close. So what we do is we do the comparison, and we are going to need three more if blocks straight away. So here it goes, and now we need candle 22 is close, so we now take candle 22's closing level, candle close, okay, and then candle 23 is close, and then comes candle 24 is close, and candle 25 is close. So here we have taken into consideration the closing levels of prior four candles, and now we need to match or compare their values with respective R's linear regression intercept levels. So here we go, and we have to look at the candle 22 was the candle with shift period 2. So here also this is the linear regression intercept value of 2 hours back, and we will be comparing the respective hours closing level and respective hours linear regression intercept value, and it should be less. So here we take this as first input less than second input. Now candle 23 is the candle with shift 3, look back period of 3. So now what is wrong? Now is the time to take the linear regression intercept value of candle with work period of 3. So here we have line 18, and it should also be less. So we now have to consider candle 25 and candle 24. And here the candle 24 is the candle with look back period of 4, and it will need to be compared to the respective linear regression value, which is line 19. So here we have done this. Candle 24's closing level is needed to be less. First we connect this, and it should be less. First input is less than second input, and then we will need to compare candle 24's closing level with line 19, and here also it should be less. So here first input less than second input, and candle 25 is not going to be any different. Candle 25 is the candle with the back period of 5, and it will need to be compared to the linear regression value with look back period of 5. So candle 25 close needs to be compared with line 20, and it should be less. So here we have got these requirements in place, and now we need to take some more lead blocks before we get this blocks where they belong. So here it should be less. First input less than second input. Okay, so all 4 hours values, closing values have been taken into account, and now is so here we have done these price action requirements for 4 hour and 1 hour candle each, and our next step would be to connect these requirements with the ratios with the calculations which we are doing for determining the stop loss and the target. So here it is now candle 22, candle 25, before that comes candle 23 and candle 24. Here candle 22 and these three blocks now. Here we have got this. The only thing that needs to be done is to get the values. I think I need to reduce my uh, noise from the fan. Just a minute. Yes. Now, what we need to do is do some calculation before we do the comparison between last hour's candle close and then this 1 minute candle to get the precise entry point. So our first thing, we can even do this. First we get these if conditions done, and then once we get the open at market we can define that. So let us do either way, it will work. So now we have to look at candle 27 and candle 28's closing levels and compare it to the hourly candle, last hourly candle actually, and candle 27, candle 28. First thing is candle 28's close, that is the candle with look back period of 2. It should have been less than the last hour's candle close, and then candle 27's close should be above last hour's candle close. So we take this closing level and we look for last 1 hour candle close, and that is the candle 21 shift 1 and hourly. So we now need to compare these 1 minute closing levels with the hourly candles closing level, and that is candle 21. So we take into account candle 21 closing levels. Here it comes. candle close, and we have to get this right, and candle 28's closing level should be less than the candle 21's close, and then the candle 27's close should actually be greater than here than the candle 21's close. And then comes the time to bring the open at market block, and here it okay, buy side, and we want candle 27 to have closed above candle 21. So we take this first input greater than second input. Okay, now is the time. Define the parameters for the buy side, and for testing purpose 1.1 million should be good enough. Slippage can be kept at 2 pips, and as I said, we will now need to do the calculations for stop loss and the target price. So we remove these existing indicators and we bring in fresh calculation expression blocks as per our requirements. And for that, what we are going to need is creation of fresh variables, and then we will be able to so here it comes, and here is line 26, and fresh variable which we create is going to be the stop loss pips, yes, stop loss percentage SP, and it will be 0.2, and then we also need to create the type conversion factor. So we make it type conversion factor, and its value would be 10 raised to the power 4, as we have Euro USD whose pips if we want to be defined in integer format, then we will need to multiply it by 10 raised to the power 4, as Euro's pips comes after 4 decimal points. So that's it, and we need to do A1 into A2 into A3, A1 into A2 into A3. Okay, we take another if block, calculation expression. We take line 26 as it is, and we create a new variable, target price pips, target pips, and it will be 0.5, that is 50% of the daily ATR. So here we go, and the type conversion factor remains the same as the underlying instrument is going to remain the same. So here now we join it. Okay, now the type conversion factor calculation has been done. We create the fresh variables in long format, integer format, sorry. And that will be stop loss pips, and it will be equivalent to this calculation a1 into a2 into a3, that is the ATR into 0.2% into 10,000. And here also creation of fresh variable, target price pips. Okay, and the same thing here. We forgot to do the calculation, so we do it now. A1 into a2 into a3. Okay, so here we have done this. Buy side is done, and for the session we are also running out of time, so for the sell side we will need to wait till Monday, but then there is a weekend, so I think you can also try to test your algorithm development skills. And this setup is not actually much complex, it's fairly simple. Only one indicator is there, and it's also, as I explained to you, the law. It is it can be very easily developed by you as well, looking at what we have done so far. So that's it for today's session. Have a fabulous weekend ahead. I will be back during the Monday session to finish the sales side. See you on Monday. Goodbye.